Hello and welcome back to another video. I just want to start this video off by thanking you all who watched some of my previous videos, leaving likes, leave comments if you got any suggestions on what I can do better. It gives me a lot of uh, enjoyment doing these videos and seeing that people are actually watching them, and hopefully you're gaining some knowledge and um, doing well in the market yourselves. That's what we all hope for, right? Making money. So today we're going to talk about some things that are going to be stock related and just kind of in general. We are going to get into some stocks that I'm actively more watching this coming up week, especially after the little bit of a market crash we just had. So hopefully you did your research and you believe in what you invested in. And so let's get into it. We're going to start with the current inflation levels. The Fed just had their meeting, and the current inflation's at like 2.4% according to Google. I believe it's actually a little bit higher than that, and that's why the Fed is wanting to keep everything the same, try to drive down that inflation a little bit. But then we had poor jobs reports on top of it, which kind of counteracts one another. They can only fight one at a time. Are they fighting the right one? I guess that's going to be for us to see in the future. Hopefully they are and they know better than us, right? I think we should still have another rate cut or two coming. It's just going to spark job growth and money flowing and everything, get us back on the right track, especially with everything that's going on with the war and the strait that's kind of shut down right now. Oil prices, they're still going up. They're still under $1 or $100, excuse me, which is great. We did spike above $100 not too long ago, if I'm not mistaken. It looks like we stayed under $100. That's great to see. That's going to be a huge driver. We're still way up, double digits up, double digit, almost 50% up. That's going to be a huge driver when it comes to this inflation and in the market because everything costs more, especially when you're dealing with energy, you're dealing with the basis behind every single company. If they do goods, they ship, they receive, you're spending fuel there. If they're manufacturing goods, they're spending oil there. It all will drive prices up. Now we're going to get into the fear and greed and the VIX. I haven't discussed about this on my channel yet, but it is something to always pay attention to. A 20 to 30 VIX, which VIX is futures. So where they see the future of the S&P 500 going. And between a 20 and a 30 typically indicates a huge amount of fear, and it's always historically been a great time to buy. And that's exactly why everybody uses it. They look at the VIX, they look at the Fear and Greed Index, which I'm about to pull that up in a second. And anywhere over a 20, that's when investors start looking for buying opportunities. They see great opportunities. It typically means that the S&P 500 is going down. They kind of correlate to one another. One goes up, one goes down, one goes down, one goes up, that kind of deal. Fear and greed. We're in extreme fear. And this is exactly what everybody talks about when it's time to buy. The every previous crash market cycle that drove extreme fear has always pretty much been a great buying opportunity. Now that does not mean just go blow your whole load on a single stock or ETF or whatever. This is a DCA in because we may not be at a bottom of the market cycle. It can continue going down. So you dollar cost average in, you keep putting the money in every week, bi-weekly, monthly, whatever it is that works for you. You just keep putting the money in steadily into the stocks that have great value for a good price, and you more than likely will end up positive at the in the long run. That's what we're shooting for. Long run, we're not looking for buying today, selling tomorrow. We're looking for buy and hold stocks that are gonna double, triple in the future. Maybe not even this year. We're talking maybe 3 years from now. They're going to be triple what they were today. That's exactly what we're looking for. Long-term growth, outpacing the S&P 500, and this explains it. So the fear, everybody's selling, everybody's scared. They are looking for the exits. It's a perfect time to be running in and picking up what they're putting down. They're going to sell at losses, and that's a great time for those of us who have been paying attention to the market and understand that the market goes through cycles. And right now, there's a lot going on that's causing the market to be down. That's a great time for us to be buying. And that's exactly what we're going to keep doing. I got a couple of stocks pulled up here that I think are noteworthy this week, and I just kind of want to discuss them. And S SMCI has been on my buy list for a while now. I've been DCAing in. I am currently down, but I think most people are down. In one day, it went down 33.32%, over $10. There's a reason for this. The co founder, one of the co founders, was found illegally distributing and selling chips to China through utilization of a subcontractor, and they were essentially smuggling the chips into Taiwan and then, or selling the chips to Taiwan and then smuggling them into China. And he got caught. It was like $2.5 billion, $2.6 billion, something along those lines. SMCI has stated that they're fully in cooperation with investigators and they're doing what they got to do. He already stepped down from the board along with the other person that was assisting in it, and they are looking into that contractor that was assisting them and aiding them in what was going on. With that being said, they have already filled the board position with a temporary person, and hopefully, this does not actually blow back too much on SMCI as they are assisting in the investigations once again. Now, what does that mean for the price? Well, they shot down heavily. They haven't been this low since 2024, November of 2024 was the last time you could pick it up at this price. And that's exactly what I'm looking at. It is a gamble because there could be more blowback on the company. They were not named as the defendant, as a defendant. So hopefully that means that the company itself was unaware of it and it was just a one off. A couple people decided that they wanted to get rich quick. Um, However, there is going to be a certain amount of blowback because he was a co founder. It's not like he was an intern or something along those lines that you could just get rid of them, sue them, put it all on their name, it's tarnished, and move on with your life. His name is throughout the company. With that being said, I am looking to pick some shares up. It is a gamble. It is a big gamble. However, you have upside potential if they're found to not be involved and they jump back up. I like it because of the gamble aspect of it. With all that being said, do your own research, know your own risk tolerance. Don't go buy the stock just because I said it. I'm not a financial advisor, and I don't think any financial advisor would be giving advice to buy right now, especially with that kind of turmoil going on. We're going to move into the trade desk. The trade desk is still moving down, but they did hit they're up from their 52-week low in February, which is good to see. They keep bouncing around, going up a dollar, down a dollar. They're just kind of cruising along here right above this resistance. They did break down below the resistance a couple of times. In my opinion, good buying opportunity. There's a couple of reasons for that, and one of the reasons is they're kind of moving up with some of these ratings and the analysis ratings, and they just had an audit. The audit came back that they were found, the findings allegedly included improper fee applications, clients being automatically opted into paid features without consent, and concerns over whether media and data costs were passed through without unauthorized markups. The reason why this does not bother me at all is the trade desk has always been huge on clarity. They want it to be clear to everybody exactly what practices are going on. So that is kind of a little bit of a scar when it comes to that. Of course, they're not going to be as beautiful as they once were when it comes to that because they just got found allegedly doing it. Now, because it is allegedly, that does not mean that 100% it was the case. Now, we'll see what actually develops from it. However, I do believe, especially with them having that OpenAI partnership possibly going on, I think they're setting themselves up to be able to really start gaining some traction again. The biggest worry with the trade desk has always been competition, especially when it comes to Amazon, which Amazon is also on the list today. So, can't have one, get the other kind of deal. Uh, but we're looking for good values at good evaluations, and I believe the trade desk is still one of those. I am currently down quite significantly in the trade desk. I am looking at continuing to DCA in and lowering my average cost basis, which I think they're going to be right on. So anywhere below a $30 mark, I'm going to continue DCAing in on the trade desk. I think they have great upside potential even past that, but got to put a number on it, right? So 29.43 is that upper resistance. Anything below that, I'm going to still continue DCAing in. I would love to see us get back up to this $37 mark, in which case, at that point, yes, I am going to pull some profits. The reason for that is that's going to get my average cost basis back to positive, and I'm going to pull some out to cover some of my expenses. And that's going to lead us into another subject later on in the video, which is taxes. And it's currently a battle that I'm fighting myself. So we've all been there. We all will be there, especially if you're any kind of successful with this long term holds and strategies. But we're going to move on and finish up the stocks before we get into that. SoFi. SoFi has been around the block, up over the $30 mark for a bit. They reached it for a bit there, a few times, and they're coming back down into good value. Um, I sold my SoFi at a positive. I bought back in here. I sold up in here. I almost bought back in here, and I decided not to. We, with that being said, their valuation is great. Their metrics are good. Their books are good. Their leadership is good. Are they a buy? I believe they are a buy. I'm going to keep buying them myself. With that being said, anything under $20, I think you're getting a heck of a deal. I think we're going to be back upwards of that 27, 24 mark by the end of the year. I think good things are going to happen, especially with what's going on with the war in the Strait. That's going to cause everything to be shutter shocked right now, and people are going to keep selling off. I think it's a great opportunity to pick up on some of these leading companies that you're just getting a great deal, and that's my opinion. But we're going to move on to AMD. AMD's kind of been going back and forth, going up $10, down $10, up $4, down $3, so on and so forth. I think they have a lot of good things coming ahead of them, especially with all that capex spending. I've brought that up multiple times now. And you also there's one thing that I think is causing them to retain where they're at and just keep bouncing between is this right here. The Trump releases the AI policy for Congress to preempt state ruling. Now, he wants all these data centers to provide their own power so that way it's not a US shock to the everyday person. We're not having to eat some of the costs for the data center down the road, right? That's kind of the idea. Now, with that being said, there's a lot of shovels and pickaxes that can be bought, especially when it comes to the energy game and the investing when it comes to the energy, natural resources, things along those lines. Alloy, realloys is a big one that I've been looking into heavily. I've been kind of buying here and there just to see how it's going. And with the AI policy getting set, they want to do a 50 state network instead of 50 individual state patchwork. They want it all to be included into one deal, and they're trying to push for Congress to have a lot more control on who gets licensing, who's able to receive power off the public grid, who has to go and find and source what percentage of their own power. They're working towards it being a all-in-one, give Congress the power instead of these companies, which government involvement, oh man, that's a whole another rabbit hole, whether they should even have their hand in the honeypot. But at the end of the day, that is currently what's going on. Whether it goes through or not, who knows? And Samsung agrees to supply HBM4 to AMD, which is going to further AMD's scope on being able to have suppliers and buyers, which is great to see. I love seeing that they're expanding their business even further, which Samsung is also giving it to OpenAI. And so it's not just like they're only going to AMD, right? It's going to go to all of them, which is absolutely fine. I think AMD is going to become NVIDIA's competition. They used to be the bottleneck, NVIDIA was. Now that branch, that where that pipeline that NVIDIA was supplying to is now broadening. There's going to be more pipes. That's going to allow more flow. AMD is going to be a part of that network. They're going to be supplying, especially their 450 series coming out. I'm hoping for good things on that. AMD, I'd love it to keep going down. I'm fine with that. If it keeps going down, I'm gonna keep buying. It's great things. I'm total losses. I'm down 2% so far on AMD, and I'm gonna keep picking it up. I think they have a lot of room to grow comparatively to some of these other companies. Amazon. Amazon is right now it's kind of been a dead horse for a bit. And when I say that is we're starting to get down towards prices from 4 or 5 years ago. And so that means if you picked it up at the high over here 4 or 5 years ago, you're barely making any kind of profit. You're making $10 profit per share, not even is where we're at right now. Now, a lot of people are saying they're going through the exact same thing as Google, meaning they're just going to be stagnant for so long and then all of a sudden they're going to double. I'm hoping this is the case, but the reason why I struggle with that is the CapEx spending. Now, Amazon has so many good things going for it. They got the AWS, they got the their shipping, what everybody actually uses Amazon for. You got Amazon Prime. You have all these different levers and faucets that they can turn on and just start making money, right? And they're trying to grow even more with this capex spending. They're doing data centers and everything. I want to see where the money's going. However, I do believe Amazon, even if they decided to tomorrow go out and say, "Hey, what we're doing wasn't working. We're going to cut some of the capex." I think the stock price is going to go crazy. People would love that. And at the same time, do I want to miss out on great pricing for a great company if their capex spending works out and pays off in the near future? No, I don't want to miss out on it. Amazon is there. I want to be there with it, and I'm going to keep buying. Same thing goes with Meta. Meta is getting pretty close to the same thing. However, Meta did already have a huge run. I think there's still plenty of profit to be made. We're back down towards that $600 mark that I called out at the beginning of the year. and that's where I started buying, and I'm going to be looking at picking up more of that. I forgot to include it in the list, which is absolutely fine. I made mention of it, so I am happy. With Amazon going on, they did have a little bit of news, if I'm not mistaken. Yes, uh, they have a couple of smaller court-related matters that they're dealing with, which is absolutely fine. And are they going to end up in the same um, boat with that AI policy of the power creation? Yes, I believe that they are. They're going to end up in that same path forward, having to come up with their own power supply, which is absolutely fine. I'm good with that. And that's what it was, is they were having shipping issues. USPS is making it so that way they are going to be reducing how much Amazon packages they're going to deliver, which, in my opinion, is absolutely fine. If they weren't making money on it, it's a business. You got to treat it as such. Amazon was probably making a ton of money off of it by being a preferred, using them as a preferred vendor. Now, Amazon has been coming up with their own ways to make these shipments possible, which is fine. They actually delivered more than what USPS did for them, which I think is great. I think they are having a path forward that's not going to be detrimental to their market and their cash flow. And that's exactly what they need. With that being said, there's a couple of things that I wanted to bring up. I'm just going to leave the Amazon screen up. Why not? We're just going to talk for a second. When it comes to taxes, and when to pull profits and things along those lines. You gotta make sure you have a plan and you gotta follow that plan going forward. Just like when you're doing your own research and you're finding good value companies that, whether people are talking about them or not, sometimes you don't want people to be talking about them because you don't want to get in on the FOMO and then have to survive and live through the crashes because you don't want to pull your losses. And that's exactly where I'm going. Don't be scared to sell your losers. If you sell your losers, it can offset some of your gains from other good buys. We all have losers. We're all going to have losers. The best of the best have had losers, massive ones that, whether they sat on them and just watched them go broke, or whether they ended up selling them and offsetting some of their profits from a different sale. That's completely on your own game plan. If Now, I'm not saying just go buy companies if they go down 20%, sell them off and call it good, right? But when you pull profits, make sure you're setting money aside for taxes. Make sure that when the loser's too far gone and it's a drowning company, you sell, because there's no point in your money being there is not going to be a lifeline to that company. If they're done, they're done. Um, Now, in like PayPal's instance, there's a chance they'll get bought out. So there's a good chance that buying in at the $44 or $47, whatever it is today, it can actually cause you to walk away with 70 something dollars tomorrow. Now, there is hopium there, which hopium can get you in trouble too. So, either way, make sure you're selling when it's smart for you, whether it's a loss or a win. Make sure when you have the wins, you set some of that money aside for taxes or pay it in. Um, so that way you don't get hit with thousands of dollars, tens of thousands, hundreds of thousands of dollars at tax time, like some people do, because then you have to sell. And the only other thing that I will mention, and I did it this last year because I didn't necessarily understand it, and that's absolutely fine, is exactly what a wash sale is. A wash sale is when you sell a company at a loss and then you buy it back within 30 days. Essentially, it's their IRS's way of making sure people don't sell right at tax time for a huge loss and then right at the new year, at that flip the next morning, essentially. they buy all those shares back. So they get keep the loss and then actually move forward with owning the shares at the same price they sold for. Now, what that does is essentially you can't use those losses in towards your taxes. So if you made $100,000 in profit and $20,000 was a wash sale, you actually would owe essentially $120,000 in profit in taxes. That can kind of get scary, and I had quite a bit of it this year. Now, the ones that I bought back, it was because they went so low and I ended up making money on them. So I actually amplified essentially how much I was paying in taxes. It gets a little scary. There's ways you can get around the wash sales. Make sure to do your research into it before attempting anything along those lines. And just make sure what you're doing fits your plan and make sure you have the plan before you go ahead and do it. With that being said, thank you for watching the video. If you learned anything, if you enjoyed it, hit the like button, share with a friend. It helps out tremendously. And I hope everybody's having a good week. I hope everybody's investing. They're looking at their portfolios, making their sound strategies. That's what we're all here for. Have a good one. I'll catch you in the next one.